down. It'll be supply side improvements, and it'll be less fiscal.
Hello, my insane friends. We're sitting here listening to Chairman Powell, and I'm looking at things
It is our job to get inflation down to 2%.
on the stocks that I sold to see how what he's saying is affecting the price of the stocks and my decision to sell them.
I think a really significant threat to further strengthening in the labor market in the form of higher participation over time is high inflation. And also high inflation is taking away the benefits of some of these large wage increases that we're seeing now. So we do hope to achieve, and our plan is to achieve both of those goals.
If I could follow up, does the danger of tightening too much as policy works its way into the economy with a lag mean that you should go back to being more forecast dependent in making decisions rather than the state dependency you've been using as a framework for the last year and a half or so?
Dependency was particularly around the thought that if we saw a very strong labor market, we would wait to see actual inflation before we tightened. And so that was a very state dependent thought, because for a long time we'd been tightening on the expectation of high inflation, which never appeared. And that was the case for a number of years. So in this particular situation, we will be clearly monitoring incoming data as well as the evolving outlook.
He's already said that they're still going to be tightening with their fiscal policies and raising interest rates.
Let's go to Michael Derby.
Thank you for taking my question. I want to ask you, with the benefit of hindsight, and I realize, that is what it is, but do you feel that monetary policy and fiscal policy maybe did too much to react to the crisis, and that part of the inflation problem that we're having right now is because the government response, collectively was more than what the economy ended up needing?
So I think it's too soon to write that history, really. But what I would say is this. If you remember what it felt like at the beginning of the pandemic, literally the global economy shutting down in large part, including our own economy, and people going to their homes for weeks on end in masks, and there are no vaccines, and it could be a really long time to get them, and then you have economic activity drops by a shocking amount in one quarter. So there was a real risk of lasting damage. Yep. And I think Congress responded remarkably with the CARES Act, incredibly timely, very powerful. There'll always be flaws in these things, but in real time, it was a remarkable achievement. And we responded, and what we were able to do was, stave off a collapse of the financial system at the beginning and make time for what really needed to happen, which was the income replacement and then the recovery that Congress enabled with the CARES Act. So now that was a lot. And what we did was a lot. And, what we have now is we have the strongest recovery of any country. And we have a recovery that looks completely unlike other recoveries that we've had, because we've put so much support behind the recovery. And we're managing the relatively high class problems that come with that, which are high inflation and a labor shortage.